Business Economics 2 MCQs Part 10. The spot exchange rate option A is the rate today for exchanging one currency for another for immediate delivery. Option B is the rate today for exchanging one currency for another at a specific future date. Option C, it is the rate today for exchanging one currency from another at a specific location on a specific future date. Option D, it is a rate today for exchanging one currency for another at a specific location for immediate delivery. The correct answer here is option A dash A is the rate today for exchanging one currency for another for immediate delivery. So the spot exchange rate is the rate today for exchanging one currency for another for immediate delivery. Dash expenditure adds to the asset of the country. Option A capital, option B current, option C non, option D less. The correct answer is option A capital. Capital expenditure add to the asset of the country. Difference between buying and selling rate in an exchange rate is known as strike price, option B spread, option C swap point, option D spot rate. The correct answer is option B spread. Difference between buying and selling rates is in exchange rate is known as spread. Exchange rate between currency A and currency B given the value of currency A and B with respect to a third currency is known as option A golden standard, option B flexible exchange rate, option C fixed exchange rate, option D cross exchange rate. The correct answer is option D cross exchange rate. Exchange rate between currency A and currency B give the values of currency A and B with respect to a third currency is known as cross exchange rate. The price at which a market maker is prepared to buy a currency or borrow is termed as option A spot rate, option B bid rate, option C ask price, option D forward rate. The correct answer is option B bid rate. The price at which a market maker is prepared to buy or borrow is termed as bid rate. The dash is specifically well suited to offer hedging protection against transaction risk explode. Option A forward market, option B spot market, option C transaction market, option D inflection rate. The correct answer is option A forward market. The forward market is specially well suited to offer hedging protection against transaction risk exposure. What is FEMA? Option A First Exchange Management Act, option B Foreign Exchanger Management Act, option C Foreign Exchange Management Act, option D Foreign Evaluation Management Act. The correct answer is option C Foreign Exchange Management Act. So FEMA stands for Foreign Exchange Management Act. The swap arrangement where the principal amount are not exchanged but periodically payment will be option E currency swap, option B cross currency interest swap, option C interest rate swap, option D non-financial swap. The correct answer here is option C interest rate swap. A speculator in foreign exchange is a person who option A buy foreign currency hoping to profit by selling it a higher exchange rate at some later date. Option B earns illegal profit by manipulation foreign exchange. Option C causes difference in exchange rate in different geographical market. Option D none of the above. The correct answer is option A buy foreign currency hoping to profit by selling it a higher exchange rate at some later date. A floating exchange rate is determined by the national government involved. Option B remains extremely stable over a long period of time. Option C is determined by the action of central bank. Option D is allowed to vary according to marketplace. The correct answer here is option D is allowed to vary according to market forces. The balance of payment account is conveniently divided into option A current account and capital account, option B visible account and invisible account, option C long-term capital account and short-term capital account, option D none of the above. The correct answer is option A current account and capital account. The balance of payment account is conveniently divided into current account and capital account. Which one of the following theory says that to export was good and to be encouraged but to import was bad and to be discouraged? Option A comparative cost advantage theory, option B the theory of absolute advantage, option C the factor involvement theory, option D mercantilist theory. The correct answer is option D mercantilist theory. Which Indian industry have been hit by globalization? Option A cement, option B jute, option C toy making, option D information technology. The correct answer here is option C toy making. In the following, which is the characteristics of a tax? Option A compulsory, option B optional, option C force, option C nationality. The correct answer is option B compulsory. Which is the main objective of a tax? Option A increase in consumption, option B increase in production, option C raising public revenue, option D reduction in capital formation. The correct answer is option C raising public revenue. Amalgamation and rapid unification between countries can be identified as option A globalization, option B liberalization, option C socialization, option D privatization. The correct answer is option A globalization. Globalization has improved in the living structure of option A, all the people, option B, worker in developing countries, option C, people in developed countries, option D, none of the above. The correct answer is option A, all the people. Globalization has improved in the living structure of all the people. Direct tax have the implement of option A, evasion, option B, convenient, option C, progressive, option D, economy. The correct answer is option C, progressive. Among the following canons of taxes, which one has been given by Adam Smith? Option A canon of uniformity, option B canon of productivity, option C canon of diversity, option D canon of equity. The correct answer is option D canon of equity. Among the following canons of taxation, canon of equity is given by Adam Smith. The Indian tax system is proportional, option B progressive, option C regressive, option D digressive. The correct answer is option C regressive. The burden of direct tax is borne by option A rich person, option B poor person, option C on whom it is left, option D none of this. The correct answer is option C on whom it is left. The burden of direct taxes is borne by on whom it is left. Indirect taxes have an element of equitability, option B certainty, option C economical, option D encourage honesty. The correct answer is option A equitable. Corporate income tax is a tax levied on option B corporation, option B municipalities, option C cooperative society, option D companies. The correct answer is option D companies. Corporate income tax is tax levied on companies. Which of the following is the major source of revenue in India? Option A direct tax, option B capital levy, option C grant in aid, option D indirect tax. The correct answer is option D indirect tax. Dash helps to equalize the exchange rate. Option A arbitrage, option B speculator, option C exchanger, option D agent. The correct answer is option A arbitrage. Arbitrage helps to equalize the exchange rate. For more MCQs, please prefer subscribing and click on notification bell icon for the next part. Thank you.